This is the Daily Market Comment by Haralambos Bisuros. I'm Maria Pashilides. Thanks for joining us at XM.com. The US dollar continued flexing its muscles against all but one of the other major currencies on Thursday and during the Asian Trading Friday, with the dollar index hitting a 20-year high. Dollar traders kept adding to bets for another triple hike by the Fed at its September 21st gathering, after data supported the notion just a day prior to the official U.S. employment report for August. Initial jobless claims for last week fell more than expected. Layoffs dropped in August, and the Institute for Supply Management revealed that manufacturing grew steadily during the month, with the details of the report pointing to a rebound in employment and new orders. All this is consistent with a tight labor market and an economy showing some signs of improvement. With the Fed pointing to a very strong labor market as the reason why it doesn't believe the U.S. economy is in recession, the financial world is likely to lock its gaze on the official U.S. jobs data coming out later today. Non-farm payrolls are forecast to have increased by another 300,000, a slowdown from July's 528,000, but still a solid number consistent with further employment strength. The unemployment rate is expected to have remained untouched at its 50-year low of 3.5%, while average hourly earnings are anticipated to have accelerated somewhat in yearly terms. Another round of strong employment numbers could add to the already high probability for another 75 basis point hike by the Fed. However, with the dollar staying very strong heading into the release, there is the risk of profit-taking if the numbers just meet their forecasts. For the dollar to keep flapping its wings, the result may have to be better than expected. In the case of a disappointment, the greenback may pull back, but it is unlikely to reverse its uptrend. The only currency that stood its ground against the greenback was the Canadian dollar. The Loonie came under strong buying interest, with its traders taking the probability of a 75 basis point rate increase by the Bank of Canada at next week's gathering to 85%. Yet it's hard to imagine the risk-linked Loonie continuing to outperform the safe haven dollar in a risk-averse environment, even as both the Fed and the Bank of Canada appear overly hawkish. However, with the Canadian economy performing better than some others, the Canadian dollar may add to gains against the already wounded yen, euro, and pound. After all, year to date, the Loonie has been the second best performing currency among the majors, behind the king US dollar. This was today's Daily Market Comment. Thanks for joining us at XM.com.